This is an audio recording of the LendIt Fintech Weekly News Show. The show is streamed live on LendIt TV, LinkedIn, YouTube, and Twitter at 5 p.m. Eastern Time every Thursday. In this fast-paced show, the LendIt News team and a special guest discuss the most important fintech news stories of the past week. Good afternoon, everybody. Welcome back to the LendIt Fintech Weekly News Show. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech. And today I'm not joined by Todd Anderson. He is actually in Disney World with his family. We have Bo Bruscone here, my good friend and colleague. How are you doing, Bo?
I'm well, Peter. Thanks for having me back on.
Of course. And joined with our special guest today, Dan Kwan. How are you doing, Dan?
Very well. Thank you.
Okay. Before we get going, Dan, just a quick 30-second update on, is it Nevcart? Is that how you say it?
Nevcart, yes. Never call.
Okay. Just quick 30-second update on that.
Sure. Thanks, Peter and Bo, for inviting me back to the show. For folks who know me, I was a former regulator, and last year raised a fund, Nevcart Ventures. We're investing in fintech and insurtech, and mostly focusing on early stage startups. So been doing very well. Very busy year for us too.
Right, and it has been a very busy week this week. Let's kick it off with what I think is probably the biggest story of the week, and that's we had like many big stories to choose from. But we're going to start off with Walmart, and Walmart announced that they are. We now know the name of their fintech, the new fintech initiative. Say they made two acquisitions public this week. They've acquired Even, and that's not to be confused. There's two Evens. Even Financial, which was actually being acquired by MoneyLion. That's not what Walmart is doing, but Even.com, which is sort of the earned wage access company, they've been acquired by Walmart, and One Finance, which is a neobank. I don't really know that well at all, but together they've both have been acquired. Valuation of their last valuation was supposedly $400 million total between the two of them. So not a huge acquisition, but still, pretty serious. And Walmart, we're starting to see a little bit more detail of what Walmart's going to be doing. Keep in mind, Even Walmart was a very big customer of Even. They had their technology inside Walmart, so obviously there was a relationship there. And Dan, I know you've been following Even for a long time, but what are your thoughts on the Walmart acquisition here?
Yeah, I think it's a very interesting move that Walmart, and I guess not just Walmart, but also Ribbit move in the space. So clearly, they're talking about the super app, and we have to bear in mind everything Walmart does actually is sort of trying to with their big Walmart business, Walmart shops, or maybe Sam's Club as well in mind. So how did this new venture really help, more, incremental sales in the stores, and also obviously with EWA or wage access, that's helping their employees too. So we don't have any details, but if you look at the One Finance, which is a relatively new player in the neobank space, and when they started, they actually said, listen, we're different from Chime or Varo, which target the sort of underserved consumers. We are more of a middle class, maybe prime, near prime customers, which are underserved relatively by the banks. And the Walmart shoppers are sort of more probably geared towards, I would say, Chime or Varo customers. Mm-hmm. So how that this new venture is going to really, help solve the problems for the Walmart shoppers, who I would argue, Walmart used to, still does today, distribute these prepaid cards to, Green Dot basically took off with Walmart. Now you have Chime really that's very good at acquiring customers digitally from mobile. Now this new venture, are they going to really target sort of the customer that Chime is already serving and serving pretty well? I think there are a lot of details that I think as fintech investor, we're very interested in learning in the coming months and weeks.
Mm-hmm. Bo, any thoughts?
I just get dubious whenever I hear about any North American company developing a super app, because I just don't. I think that model that came out of China was effective there for a number of reasons, and won't be effective in North America. So I think Walmart can be successful as a fintech. I think they can develop great products. I think they can, use their reach, and they have all kinds of advantages here. But when they say they're looking to build a financial super app, I think they're going to fall short. They could do something really significant, but I don't think a super app is going to happen.
Well, it's funny because a firm had some news this week saying they're going to do they're creating a super app. PayPal have said they're creating a super app. I mean, it's, there's a lot of work.
It might be the secret handshake for a bigger valuation. Like that might just be the word that you need to use. I'm getting tired of those words, right?
Yeah. No,
and somehow there's always a PayPal root in it, right? So Levchin, co-founder of PayPal is PayPal, and Bill Harris, who's the co-founder of One Finance, who was also first CEO of PayPal. So right. maybe there's something about PayPal. Another point I want to make here is really about the role Even plays here. So again, we don't know any details. So Even is the early wage access provider, and Peter, as you mentioned at the beginning of the show, they are a current vendor or EWA solution for Walmart. So if now Walmart is official owner of Even, how does it really affect Even's ability to serve other employers? So that's really a big question mark too.
Yeah, that's a really good point. Actually, if Walmart wants them all for themselves, not much to be revealed. And I finally heard back from Omar Ismail, by the way, the head of this whole operation. I've been hounding him for the last 6 months, and he finally emailed me back this week. But he doesn't have anything to say. He said, so we will, being very, very careful about what they say. Anyway, let's move on. Want to talk about Diem, Facebook's. What would you call it? A tragic sort of project that never really made the light of day. It was originally called Libra, then rebranded to Diem, and then they had their the digital wallet, which was called Calibra, and is now called Novi. Lots of brands there. You got Facebook's that's now Meta. So Diem is dying, it looks like, and Silvergate Bank, which was going to be the bank partner for Diem, is now, according to Bloomberg, I think it was, is actually going to be taking over the assets of Diem for $200 million. So it looks like Facebook are got their tail between their legs, and they're going home from the sort of the digital currency party, shall we say?
Is that interesting to you that Meta, Google, they both tried multiple times at payments and just financial services in general, especially Google. None of them actually has ever succeeded in any shape or form. Right. Last year there was a big sort of, I think it was the last year, or maybe, COVID has really, I really lost track of time because of COVID. Google came out with this Plex accounts, and they got multiple bank partners on the platform, and now they killed it last year, and they just go back to scratch. They hire somebody from PayPal to restart their sort of foray into financial services. Mm-hmm. And I think for this Diem thing, it's not a problem with stablecoin. And in fact, Silvergate, I think the article talks about the Fed is not comfortable with Silvergate being the issuer of the stablecoin, but we also have Figure announcing with a bunch of community banks issuing stablecoins.
Right.
And even the President's Working Group recommend that stablecoin should be brought under the FDIC and the Fed's purview. So I feel like this is not just stablecoin's problem, or not even Silvergate's problem. It's really going back to sort of the uneasiness of the regulators or the policymakers and politicians about Facebook.
Mm-hmm. Mm-hmm.
Yep, I'd agree, and I'll just mention just very, very briefly that Zuck is really good at pointing out things that are going to be big, and there's some things they just can't execute on. And I'm not going to, there may be a whole lot of reasons, but metaverse probably going to be big. Crypto probably going to be big. Can Facebook play in it? Probably not.
Right. Okay, so let's talk about another huge tech company here, and we're talking about Apple, the biggest of them all. I thought this was really interesting when I saw it this morning. So Apple is going to basically do an update to iOS soon, where you'll be able to anyone will be able to just use their phone to accept payments. That's credit card payments or Apple Pay payments. That will be basically they're going head to head with Square. Block, as I should say now. They are really. This is without any hardware, because Block you still need hardware of some sort to accept payments, whereas Apple's saying just use your phone. That's it. Obviously, that's where we're going. And Apple looks like they want to start a merchant acceptance business.
Yeah, this one's huge. I don't know why this wasn't super obvious to me, but this is a giant. I don't even want to call it an innovation. It's more of just like just one more chip that they've tucked into the case that changes the game. Mm-hmm. And I think it is, obviously it's going to be pointed at merchants first, but why isn't this also like, is there talk about this being consumer also?
It should be. In the long run,
on
the long run, I can't see. It's all going to be hooked up with Apple Pay. I can't imagine it not being consumer. Like you can say to your buddy, "Hey man, you owe me $50. Okay, here's my credit card."
Right. But, and then they get interchange and all kinds of stuff. So it's a clever move, and I think it's going to change the game.
Yeah.
I think the interesting thing is, which the article fails to really go a bit deeper. Is how is this going to really compete head to head with Block or with Square? So I think having a dongle itself, Square gives a dongle for free if you're SMB merchant, and accepting payments on the dongle is not that difficult. It's just like when people say tapping is better than swiping, that's not really true. And curious about whether Apple is. I'm sure payment acceptance is just the first move, but Block's offer goes beyond just payment acceptance. That's their first thing,
right?
And it's all about obviously all the services that they provide to SMB merchants. Interesting whether Apple is going to do that, and also whether this is going to really create any kind of a competitive, anti-competition complaints from Square. That's just not clear to me.
Yeah, you're right, because Square really has an entire ecosystem now, whereas the dongle and the merchant acceptance is just sort of the entry point, as you say. So anyway, we need to move on because we got another big story to talk about. All of these stories could have been the top story. This is UBS, the Swiss banking giant, found out they have $3.2 trillion under management. That's pretty impressive. They're buying Wealthfront, which has less than 1% of the AUM that UBS has. Wealthfront has $27 billion under management that they're buying it. $1.4 billion all cash deal. That's pretty impressive. Wealthfront really was, the pioneer. Them and Betterment were the pioneers when it comes to sort of online advice and online wealth management. I think they've both done a really good job, and it's probably the end of an era or the beginning of a new one. But the Wealthfront investors seem like they've done pretty well here.
Yeah, two thoughts on this one. One is back of the envelope. It looks like about a 20 times revenues, multiple valuation. So solid. And also a real long haul for Andy Ratcliffe, whom we've had as a speaker before, and I'd count as a friend of LendIt. He's been at that for 14 years, according to LinkedIn. So that's saying something. I mean, whenever we talk to him, he certainly had the love, he had the mission, and but I think an exit was of this nature is definitely the right move for Wealthfront. Because UBS can really use that technology and deploy a lot of their clients on the Wealthfront platform, I would assume, for greater margins and greater service. So this is a great move for, I think, both firms.
Absolutely, yeah. Wealthfront. I mean, the less than 1% of assets and 400,000 users using Wealthfront service, me included. That's really a drop in the bucket from UBS perspective. It's really about the technology, the talent that they're acquiring. And if your number is right, 20x return, a multiple, that's pretty a nice exit, next payday, and all cash for investors. Much better much better than the going public, given the where Nasdaq is today.
Yeah. Just one thing I'll say before we move on. I mean, UBS actually, if you remember back to our Europe event in 2017, I think it was, where we had UBS launched their Smart Wealth product, and they had just before our event, and they talked about it there, which this was their answer to the robo advisors, and then they shut it down about 2 years later. So they tried to do it themselves, couldn't, and now they've gone and acquired someone who has been successful at it.
So here's the real test, and I know we have to move on, but what Andy would say regularly when we talk to him is, I mean, he's so passionate about developing a brilliant product, and just being extremely consumer centric. And we'll see if UBS can hold on to those developers and maintain that sort of passion for building great products. Because there's some likelihood that this just becomes kind of a walking dead in terms of app development. But
I hope not.
I hope not too.
Yeah. Well, I mean, personal capital was acquired last year, and this year is Wealthfront. We'll see how long Betterment is going to stay independent.
Right. Probably not a huge amount, not a huge time longer, I don't think. Anyway, let's move on. I want to talk about Experian. Yes, the credit bureau. They had an interesting announcement this week where they're going to allow consumers who don't have a credit report because they've never taken out credit to actually create their own credit report, and it's called Experian Go. And what it's going to do, if you have, and they don't give details, but I'm guessing it's things. If you're a recurring non-debt type transaction that happens every month, whether it's it could be Netflix, it could be your utility bill, anything that really is that you're paying every month, you can report this into Experian Go, and they can create a credit file for you. And in the pilot, they had 15,000 people in the pilot. Which the interesting thing to me, the most interesting thing of all, is these are people that had no credit score, and when they came off the pilot, their average credit score was 665, which that to me is, and that's bordering on prime. It's not quite prime, but it's getting close. That's for people who had no file. So really, I think this is a really interesting move by Experian.
So what really confuses me about this is how is it different from what Experian has been doing for about 2 years, which is
the Boost product. Yeah. So Boost is again, it's opt-in by the consumer, and they've had like, I think it was like 9 million people. They've had they even had a Super Bowl ad with that product. But that is, I think it was just your phone bill and your utility bill, and that was sort of the only thing you could do. This is now, it's really, when you think about it, it's an expansion of Boost. And Boost, you had to have an existing credit report. So this is for people who have no credit report, and then you can put on a much broader array of charges. That's my understanding. Yeah.
It's interesting. I think I would love to see more details how that works. I mean, just practically how a consumer physically links his or her various non-debt recurring payments to I got to think there's some middleman like Finicity probably in between to make those linkages. And the other thing is, I remember this was from a couple of years ago. My former colleague of mine, Corey Stone, he wrote a piece about sort of the future that he envisions. This was after the Equifax breach, where consumers are really in charge of their own credit reports. So you no longer need a middleman to really store your records. You can actually just create your own. And this is exactly what Experian is doing for those who have no credit history. But why can't we do it ourselves? We can link our own accounts, credit cards or mortgages, and send a file directly to a lender.
Mm-hmm. Mm-hmm. That's coming, I think. Yeah.
This is really important. I think we could all agree. And I think it is something that every college freshman should understand, that they should subscribe to a Substack, let's say, charge it against their, I don't know if you can ACH for Substack, charge it against their checking account, and start building their credit report. So let's say they graduate on time, 4 years later, they actually have a decent credit score and they can go and be recognized by the financial system. Right now, they're not.
Right. And that's what Experian is really obviously trying to change. Great thing for financial inclusion. Anyway, I want to talk about Plaid. Plaid announced this week they have a new product called Plaid Portal. And I actually went on there myself and registered. Basically what it is, it's letting you know, because when you go and connect your bank account, and these days it often has the Plaid logo and your bank account logo together, saying, hey, you're going to connect your bank account to whatever service. I had about 15 services that I was connected to with Plaid. Good to see them all. Some of them I'd forgotten about, and so they Plaid actually say that connects with 5,500 different services. I think this is. It's a product that apparently came out of I'm not sure what the exact relationship is, but they had to do a settlement, $58 million settlement in a privacy lawsuit, because they were out there. People were sharing the information, assuming this was Bank of America or Wells Fargo, whatever, when it's actually Plaid that's taking your information. So they had to go and do that settlement. But regardless, this is needed information, because if you're sharing your stuff with Plaid, it's good to know, you forget about it, and now you can go back in and find out everywhere you've done that.
I think Kate Adamson mentioned this during one of our interviews. I think at one of our big USA events or something like that, a year, maybe even longer ago. But I think let's say it was a year ago. Yeah, I love it. I found out that I, gave my information to Dharma, which was just recently acquired by OpenSea. And now I'm wondering, hey, should I just go unplug that somehow? So it opens up a little bit more of a, it's just more transparency. And that's always a good thing.
Yeah, I think the CFPB also asked that question in their AMPR to 1033 rulemaking, and so basically they want, the question is whether there should be some sort of switchboard where consumer can go in and check and update and revoke even access to the account services. And that doesn't Wells Fargo have one called the Watchtower?
I'm not aware of that.
And I think so. Banks actually wanted to be in control of these switchboards, and obviously aggregators from their self-interest, they want to do that themselves. But as a consumer, I think it's really better for an aggregator to do that. So if everyone has something like this, so it will be much easier for everyone to come in to see what's happening to their financial lives. And if the app they haven't been using for years, they can just feel free to disconnect it.
Right. Yeah, that's why it should work. Okay, so let's keep going here. We've got the SEC in the news. They have they're looking into the practices of some crypto companies now. They've got Celsius, Gemini, and Voyager. These are companies that offer interest products on interest on your crypto. BlockFi is another company that wasn't listed in this particular inquiry, but I think BlockFi have had the SEC be interested before, and so this, the like thing about it is that these crypto platforms, and I'm a Celsius customer. I have a bunch of crypto there that's earning interest every month, which I really appreciate. I'm also a BlockFi customer, but that it's a great place because you have your crypto. If you have your crypto in Coinbase, it's just sitting there. Have your crypto with Gemini or BlockFi or whatever else, you're earning money on it. It's not very much, but you earn something on it every single month, and that's I think that's a good thing. But I really hope the SEC doesn't shut these platforms down, because it just feels like they're circling. What do you think? What do you think, Dan?
Well, just like you, I don't have an account with Celsius, but I do have a bunch of cryptos with BlockFi, and I periodically get an email from Zach Pring saying, hey, our conversations with state regulators is still ongoing, and the day has been postponed for another.
I know. I got that email.
You got that email as well. Yeah, nothing's going to happen to you. Don't worry about it. I think SEC is really. I mean, to some degree, I feel bad for the SEC too, because they're enforcing the law given to them by Congress,
right?
And they need to decide whether this is security or not. If it is, then you need to follow appropriate procedures to disclose. I think the fundamental question is, let's just for the sake of argument, that these are securities and need to register with the SEC. How does it really help people like you and I who are using the service feel safer, or not just feel safer? Actually, our investments are safer, or maybe or maybe the disclosure will persuade us not to invest. I don't know.
Yeah. I don't know either.
Yeah, I mean, this is such a giant rat's
hole.
nest for discussion. I'd love to dive in. I'll just say that, sort of coming back one level is to say, we need better leadership among legislators to actually put forth laws that make sense with these new assets. So to me, it's pretty clear that you people are leaning on the SEC when the SEC probably doesn't have a lot of business here. And we should look pretty hard at creating new regimes that make sense with these new assets.
Hey, what I'm wondering is how many complaints is the SEC getting from about these companies saying, "Oh, this is so risky. I didn't know how risky this was going to be." And now maybe they're getting some because crypto's down 50% from its highs a few months ago. So, but they go after these interest-bearing accounts, which I guess maybe it's deemed a security, and it doesn't look like that's going to shut these companies down. It's just going to add to their regulatory burden, and most of these companies are really well funded. So,
well, I mean, anyway. It's just like the stablecoin reports that the President's Working Group published, right? So they are concerned about sort of looming potential risks to investors, or even to the financial system. But at the end of the day, I don't think they have a clear. I have no idea how many complaints the SEC has received. Maybe nothing. Maybe they're just worrying about something that's yet to happen.
Yep. Anyway, so our last story of the day here. Wanted to give a shout out to LendingClub. They reported actually what I thought were pretty strong earnings, and they were strong earnings compared to anything they've had before. They made $18.6 million in profit for the calendar year 2021. They've never made a full year profit. $819 million in revenue, and they beat estimates every quarter in 2021. They beat estimates, but predicting $1.1 to $1.2 billion in revenue in 2022, $150 million in profit. And Bo, you and I were talking before we went on, and the market does not like these results, even though they were great results, because their guidance wasn't strong enough. But anyway, LendingClub down seems like a considerable amount today after their report yesterday.
Well, there's just so much volatility in the market. Maybe they're getting hammered because the guidance was a little lower than expectations, but who's to say? But they did get crushed, the stock price.
Right.
But absolutely kudos to Scott and the team. And I think this probably is also good news for the OCC, right? So they approved recently. They approved last week. I'm sure the show probably covered the SoFi's banking charter. So now the OCC has 2 fintech banks under its purview, and now they're considering Figure, whether Figure has revised their application, and now they're going to accept FDIC insured retail deposits.
Mm-hmm.
So I just hope the regulator, especially in this case the OCC, will continue keeping an open mind and approving these de novo charters.
Right. Yep. For sure. Anyway, we are out of time. Thank you everybody for watching or listening. Just before we go, a quick reminder: LendIt FinTech Nexus, the Deal Makers Summit, happening in Miami in 2 weeks, February 7th and 8th. There are still tickets available. Go to lendit.com to find out.
10 days.
It's less than 2 weeks. Yes, there you go. So anyway, so you need to act now. Go to the website. Go buy a ticket right now. Anyway, that will be back same time next week. Thanks, Bo. Thanks, Dan. And we will see you next week.
Thanks, Peter.
Take care.
See you, Dan.
Bye-bye.
Bye.